Well, hello everyone. This is Ken Winans, and I want to give you an overview of the new MetaStock add-on called the Winans Preferred Stock Studies. I think that you will find it to be unique amongst the add-ons that are out there in that it gives you data that you don't have available anywhere else, and certainly, as I would say, an edge over a lot of traders. So let's get started. Why preferred stocks? I know typically people think of preferreds would be something that their grandparents owned or something strictly for income investors. And while it is true, when you go back and look at the long-term history of preferred stocks, which, by the way, many of you might not know, my firm is also a research firm, and we have done the long-term data collection and review of different equity classes, and with preferreds being one of them. And going back since 1900, it's no big surprise that preferred stocks have largely outperformed corporate bonds and have been able to do so with a surprisingly high yield, averaging 6.5% over 112 years. The bigger surprise, and something that I think you could probably win a few cocktails over, is the simple fact that when you include the great 1990s bull market and certainly the time since that time, which we know has been a giant sideways trading equity market, that preferred stocks have not only beat corporate bonds, but they've handily outperformed common stocks, when common stocks being considered the S&P 500. And it's not a big surprise that, especially since 2000, dividend strategies have worked phenomenally well, and a big part of preferred stocks' total return does come from the very high level of income that does come in, which even for traders can be very convincing, as you will see as we continue on with this. I like to look at, I know there's many different statistics to review, the amount of time that there are negative years versus positive years. And I know that we're all very familiar with the fact that common stocks in the United States have lost value about a quarter of the time. Preferred stocks have also lost value roughly twice as much as corporate bonds when you consider the income and the price moves on a year-to-year basis, coming in at 20%. And I'm going to cover that in more detail in a moment, but I do want you to remember that that is important, because although as we've all found out in trading, it's not what you buy, it's when you buy it. And certainly it's the same with preferred shares. Not long ago, USA Today did an article that was talking about how income strategies were not just for people seeking income, but they had been the best place to go. And the analogy I used at the time, and I think it's still true, is that although, as it says at the bottom of this chart, that we see preferreds as a boring investment, I think that tortoise and the hare fable that we all heard as kids really does ring true. And to realize that it's not just over 1 year or 5 years, but it's been the case since 1992. So I know we like to think of those fast, sleek, moving common equities that we often hear about in the news. But again, it's not always those that win the battle in profitability. It's things like this. And I would also add that I know in my case, where I'm an investment manager, that most of my clients have actually found the same thing. And I have most of my people who used to be all common stock growth oriented have looked at balancing out their portfolio with preferreds as well as corporate bonds. You can say it's because they're getting older, that they're getting tired of the volatility, but these are people who are still actively seeking appreciation in their portfolios that have found that this is a more optimal way to do it. So, as it is with common stocks, and those of us who do market analysis looking at the broad picture, the same is true with preferreds. I know that we commonly use the S&P 500, the Dow Industrial Average, for the large cap common stocks that trade in the U.S., but it has been rather difficult up until the last 5 years. It has been a security that's been around since the early 1800s, and we were asked to come up with something that would work. And I think you'll find as we go through this that the Winans Preferred Stock Index, which we better call the WIPSI, will be an indicator that you will be able to rely on to give you an assessment of what's going on in the preferred stock universe for market analysis, and certainly will help you stay clear even on individual stock selection stay clear of some downdrafts. Now, I think it's no big surprise that broad market analysis has two objectives. One is to identify the trend of a market, in this case, the preferred stock market. And the second, I think, well, and also with that being said, changes, or hopefully early detection of changes in trend for entry and exit points. But another unique part when it comes to income investments is it allows you to ask, am I better off with preferreds or with bonds? And we call that shopping for yield. And it is a very important component because, again, regardless of whether or not you're strictly an income investor or you're a trader, you need to make sure you're stepping into things when there's build-up demand going for them. And I have found that preferreds, when they're relatively undervalued against bonds, is when you get the big price moves in these securities, because very quickly that undervalued situation disappears, and hopefully you're on board quick enough that you can make a fair amount of money on the price movement alone on these securities, which we'll cover in just a bit further down this presentation. Now, a bit about the preferred stock index itself, the Winans Preferred Stock Index. It is the only index right now that does go back to 1980 to present on a daily basis. We do have extensions available that do take it back to actually 1890 using other studies. It currently has 71 traditional preferred stocks, and that's very important to remember. We elected not to include convertible preferreds, floating rate preferreds, and certainly the hybrids that are out there. We thought it was better to stay with the fixed rate dividend preferreds that trade on the New York Stock Exchange. And as the third slide shows, that as of December 2002, the industry breakdown was fairly diverse. It was 12% utilities, 58% financial services, 8% industrial, and 22% real estate investment trust, which is surprising to many people who are big advocates of owning the REITs, that a combination of REIT preferreds and REITs have usually led to much better overall returns and less volatility. It is also important to note that we have tried to stay with preferreds and issuers that have been issuing these securities for a long time. I'm not real interested in a company that just discovered that there's a way to slip a preferred in there. We wanted the companies that have had this as part of the capital structure for a long time, because you're hoping that you can roll as the preferreds get called. You can stay with those issuers that you hopefully know relatively well. So again, it was meant to be a good basic platform to monitor the universe of preferred stocks. Okay, now the advantages of the WIPSI. You can track the trend back to 1980. I have found that, and I think you'll find it as well, that when we designed this index, it wasn't as an academic study, but it was to be practically used. And as a longtime technician, that was very keen in my mind in going through this research. And although I cannot cover all the known technical studies in this presentation, I can tell you that that you'll find that if you have some special methodology you use in your own research and your own trading style, I think you'll find that the WIPSI should work as well as it does with the S&P 500 or the Russell 2000 or any of the other big mainline common stock indices. You'll see in a moment that it does trend very nicely. In this, we've also found that many people like to use relative strength of individual securities against a benchmark. I know we have to do that a lot in my line of work. And again, the WIPSI is an ideal benchmark to use in gauging whether or not your portfolio is keeping up with the pack. Now here's a chart of the WIPSI from 1980 to 2002. The top chart is price movement. The bottom chart is yield movement, or the yield, or the common yield, or the common dividend yield, probably a better way of putting it, of the WIPSI itself, or the components of the WIPSIs over this time frame. Now, I know that we're looking at some very tight lines here. This chart was primarily to show you that, yes, this type of security and certainly the index itself does trend over long periods of time. It doesn't just trade sideways like a lot of bond indices do, and that you can use the yield data to help you confirm trigger points or anything else that's going on within this area. No big surprise to many of you here. If you do go on Reuters database, you'll find that they do carry the price component of the S&P Preferred Stock Index. It was actually designed after the Winans Preferred Stock Index, and Now, the best way, even though I'm very proud of our index, I would say that I would use this the way many of us do the Dow Jones Industrial Average and the S&P 500. It's not right versus wrong, but certainly a very good way to confirm what's going on in this investment area. But again, if you want to do any kind of long-term technical studies, you would have a very hard time doing that with the S&P Preferred Stock Index, since it only goes back to 2003. And also in our case, we have not only price volume, but we also have, or excuse me, price and yield. We also have volume data. For those of you who like to do volume studies in your technical work, the S&P Preferred Stock Index does not have volume data, and actually the yield data does not come in your Reuters subscription. That's something you'd also have to buy extra. Within this add-on, you'll be able to get all three. Now, just to give you an idea of when I say that it trends well, I threw a typical, simple 200-day moving average band on the WIPSI just to show you that it does work really well of identifying the trends. And obviously, if you look at what happened in 2007 going into 2009, I mean, every index has its day, so to speak, but this did work very well with a minimum amount of whipsaws that led to itself. This is also very important for those of you who are aware of the gapping problems that can exist with dividend-type securities, that the WIPSI does a pretty good job with the number of securities that are in the index to self-correct for that and not have the big gapping problem. Now, interpretation of the WIPSI, no big surprise here. Uptrends are above the moving average band, downtrends below the moving average band. Flat extended markets have the same issue. It might be good at that point to switch to an oscillator or some other kind of trading range indicators that you may use. But I do find that I can't emphasize this enough that this is very, very good to identify trends and that this data works very well, and you have enough data to go back over a long period of time to back test and certainly find for yourself if it works well. Now, the results of just using this moving average band, I think, were very revealing. There were 9 new signals, 9 that were uptrend, and 9 signals for a downtrend. The uptrends were 88% accurate, and then certainly I'm very happy to see that the upward movement signals gave you about a 24% increase. The average decline, 13%. And by the way, this is price. It's not total return. This is price-only movement. But for any of you who might like to use any kind of time analysis in your studies, the only negative I would say about the WIPSI is that you have an awful wide range if you look at it over the long term, between 1,682 days between signals to 210. So I would say that this is probably better as an intermediate indicator for any of you thinking about trying to match it with some of your common stock studies. Now, in the preferred stock down or the add-on, you have a type. There's a little different way to get the data. There's what we call the downloader, and you will want to update your data as you need it. The WIPSI is actually calculated on a daily basis. At this point in time, we're not doing interday, and the downloader will allow you to capture the price, volume, and yield data. In addition to that, it will let you also, for those of you who might like to do some comparisons to the corporate bond market, which, by the way, the Dow Jones Corporate Bond Average is also available in your Reuters data link. We have put a ratio comparison chart to allow for that. I think it's very important to note that we've decided not to go with an annual subscription the way S&P would with their preferred stock data. If you buy this add-on, you have a lifetime use of the WIPSI downloads. And I think that's very compelling. When you think, for me personally, I will tell you that it is helpful not to have to worry about having to renegotiate this every single year. And I also would say that for those of you who might be using Bloomberg or TradeStation, keep in mind that this is something not available on those platforms. So you can have it off to the side, in fact, if you do want to track this data. Now, this is how the chart looks when you do the download. Notice that you have a very nice clean price line. You have a very nice clean yield line for the WIPSI. That's the actual yield on a daily basis for the Winans Preferred Stock Index. You have the volume bars at the bottom. Certainly you can change the colors, you can navigate it. change it to a logarithmic scale for long-term studies, whatever you may choose to do. And then you'll notice at the bottom there is a green and red band, and I will go over that in one moment. But it is a very, very clean chart when you compare it to some of the other income-related type things that are out there. Now, the expert advisor, which is what that band is, allows you to, without having to open up market analysis when you're doing your investment analysis, to just be aware of where the trend is for the preferred stock market. So if we go back to looking at that chart, I can't emphasize enough this area down here, especially when you're looking at individual preferred stocks, or you're even wanting to make a comparison to what's going on in the common stock market. It's nice not to have to be flipping back and forth to look at things, especially in backtest. That bar will let you be able to identify that, hey, it is a positive uptrend time for the U.S. preferred stock market, and you don't have to go back and look at your market charts at that point in time if you choose not to. Now, the commentary. It is easy to forget what something is or what the components are, so we have Winans commentary on the preferred stock index itself, which will remind you exactly what you're looking at and at what time. And by the way, feel free to directly contact my company if you find there's anything that you would like to add to that commentary, or things that would also be additionally helpful. It is my hope that we'll have other variations of this add-on come out over time, but for now I think you'll be happy with what you have. Now, actually something that I use more than anything else is this next item, which is the Winans chart, which is price and yield. It is a way for any of you who have ever tried to look at a yield security. You'll notice that you often take, whether it's a common stock dividend, a preferred stock, you do not get the yield unless you want to pull out your calculator or pull up a some kind of a adding machine on your main workstation. There's no quick and easy way to tell somebody what the yield is, and yet what's really funny is that when you look at the bond market, they typically price bonds in yield, but so you're having to flip back and forth, and it was always driving us crazy, especially in fast-moving markets. We like to know what we're dealing with. So when we put this add-on together, I told MetaStock that I really wanted to make sure that we gave a very convenient, easy thing for people who are trading these securities to know exactly what kind of yield they locked in. So this is what it looks like. When you were just looking at a common preferred stock chart, this is very typical. This is what you're going to see. It certainly has the dividend gaps in it. It has the volume, very common, very much like a common stock. But when you use our Winans chart, this is now what you have. This red line at the bottom, and here's the trend indicator at the very, very bottom. This red line is yield. The red bar line is volume. This is very nice because all you have to do on the add-on is, if you know what the dividend yield is of your preferred stock, you can plug it in and you instantly have, especially if you have the crosshair reader, you will know instantly what the volume is at whatever given price you're trying to place the security. That is very powerful if you are going to be using limit orders, especially in preferreds where you can have illiquidity, very similar to playing microcap stocks. You rarely want to use market orders, but it is nice to be able to basically place limit orders on bonds, limit orders on preferreds, on anything else you're looking at, and still be talking the same language about yield. And so again, this red line, I'm sorry that it is so squinched up here, but it is, if you take it and you magnify it into a 1-month chart or a 6-month chart, especially on these big downdrafts that can happen from time to time, it is very powerful. Now, looking ahead, we were looking at some easy screening tools that a technician could use to basically come up with a universe of preferreds, to take these powerful market indicators and certainly the way to look at these charts. And MetaStock and I were discussing, well, what's the best thing that we found? Well, when I was writing my 2 books on preferred stocks, I found that a good place to start when you're trying to identify candidates is to look at RSI. Now, why? I know that most technicians have been told, especially any who have gone through the CMT accreditation process, that V patterns are not they're very infrequent, they don't happen very often, and it's a problem. We don't find that's the case with preferreds. In fact, we find V patterns happen a great deal of the time, and they are very quick, they happen very fast, and as I mentioned earlier, what I think literally happens is that people realize these prices are so low and the yields have gone up so high. I mean, I remember during 2008, we were looking at non-financial preferreds that had dividend yields that were 13, 14, 15%. And people just pounce on that. They say, oh, this is just easy money. I'm going to go ahead and get it at a cheap price and lock in a high yield where I'm paid to hold on to it if I want to. But I have found that RSI is a really good indicator if you're trying to detect V patterns, especially in something like a preferred. So we set up the Explorer to basically look for within the Reuters database, which, by the way, has a sizable number of preferred stocks. I think at last count, it had to be between 300 and 400 individual preferreds and some hybrids. And it's very nice if you're trying to find new names to not have to go through and grind through a list all by yourself, but this add-on will let you very quickly go and identify the names you're looking for. Now, I want to go back very quickly to the V's and just give you an idea. I took out the trend indicator we had at the bottom, the red and green bar, and basically put in here RSI. So if you look here, you have the yield line that we talk about. We have RSI. And I just want to show you, here's a very good example of a JP Morgan Chase 7% preferred stock that, again, look at this massive run down and back up. You can see that the yield is inverse of price. And by the way, I think that dividend yield right there was somewhere around 10 or 11%. You'll notice you do not have a lot of time to go after these securities. You notice they gap up very quickly. But notice your RSI. It coordinated very well down here to be able to line up the high yield, the low price, and be able to go after it. Also, whether you choose to use this weekly with weekly compounding or daily, I would recommend keep the set for daily. But you can see that you do have these very nice times where RSI is very clean. Right here, another fantastic opportunity in price. You had another opportunity there. You had another one here. So if you're tracking 10, 20, 30 individual issues or whatever you choose to do, that you can either monitor your own universe of securities, which, by the way, that's something I do. We have a set list of preferreds that we know very well. We know their call dates. We know all these other things about them. But this is I find a very good way to start the process to identify the preferreds that you want. Certainly, I know that many of you out there might use MACD, stochastics, and all those. I just found these stochastics were a little too sensitive for preferreds. But again, the point being, this is very good to go after these V patterns, and you can certainly make a lot of money with them. Now, the preferred stock study, as we've talked about, you get the downloader, you get the expert advisor, you get the indicators, the explorations, and certainly the chart templates we talked about. I would say the other part that we've added to this is the lifetime access to the WIPSI, which I can't emphasize enough, I think is very unique. And then one other little thing that we've added, I wrote an award-winning book on preferreds called Preferred Stocks, The Art of Profitable Income Investing. For the first 100 purchasers of this add-on, you will get that book free of charge. I find that reading the book will add on to what you already have in the manual, but certainly will give you some additional insight of some other things you could do that we just chose not to try to make this add-on too overly complicated and get people used to things. This is all for right now, the price of $2.99. Certainly a 30-day money-back guarantee. I would certainly encourage you to just try it. I know that it might sound like it's kind of a foreign world to you, thinking about preferred stocks. But again, I will tell you that as a longtime technician, it has made a huge difference in the performance of our portfolio through these unusual times that we've been dealing with. And it's just nice to know that, you know, when you really tag preferred in your portfolio or the preferred ETF, to know that you might decide you want to hang on to because the cash flow is so high. I mean, I know there's been some preferreds in our portfolio that still haven't been called. And when we're looking at a dividend world where commons are paying 2% or 3% and everybody's getting excited about that, to be getting a preferred on many cases the same securities, and you're suddenly getting 6.5 or 7 in today's environment, I mean, you might decide you just simply want to hang on to the securities. But it is a powerful tool. And one final thing that I think is very important. When I meet with prospective clients, I tell them that one big difference between us and some of the big money management firms, we can travel into the shallow waters. Preferreds are one of those areas. Big institutions will, excuse the pun, prefer not to go there because they simply cannot find any of the issues in enough quantity to make a big impact in their portfolios. For the smaller independent trader and investor, you can find those deals. This is one of the few areas that you have an edge over the big institutions. And again, I think that's very powerful when we're looking for ways to make money in today's world. Here's a bit on my background. Certainly, I know many of you probably know that I also have a TV show, or I've certainly done a lot of work on TV and radio. But again, this is not newfound religion for me. I really do believe in these, and I've been using them for a very long time. And certainly feel free to contact our office. You know, no team is by themselves. And I know in the case of my company, Justin Gallardi has been and is my day-to-day guy when it comes to income investments. Certainly feel free to email him with any of your questions, or certainly call, and we are on the West Coast. But with that being said, I wish you well. Happy hunting. If you have any questions, again, feel free to contact us, and let me please keep us posted on how you like this add-on, because we're going to look at other types of income investments that we can add to other add-ons down the road. Thank you for your time.